Hey, good evening, everybody. Ken at Tortoise Capital. We got an abbreviated group tonight for the Creativity 202. I think it's lesson 25, session 26. Um, and I want to just do a quick check in with Luke and Dan, and then we'll hit the gong and get ourselves going. I'm recovering from 8 days of my brother doing home improvements in my house. Now, merciful heavens, I have a chance to rest. No more power tools going off all hours of the night. We had a great time though. I fed him at every good eating place across Kansas City. Barbecue was consumed, and last night we had sushi, so he got the full range. So everything's good here. Luke, how are things down under?
Yeah, all good here. Enjoying summer. Beautiful temperatures at the moment. Um, Last week of school for the kids, and then 6 weeks off. So yeah, just tidying some stuff up for work and getting some stuff ready for trading for next year. Just doing a bit of review. Other than that, no, all good down here.
Awesome. And Dan, how are you doing?
Doing well, thank you. We're having some pretty cloudy weather, and dog still has to go out 3 times a day, but we always enjoy our time and getting busy with all the Christmas season, Christmas presents, Christmas shopping, Christmas letter, um, making very good progress, and that's all for me.
Awesome. I'm going to go ahead and get us into the room then, and then we'll get started. Here we go. And here we go. Integrating or blending, I think, is today's topic. Go ahead, Dan.
I got fail-safe planning. Is that the correct one? Fail-safe planning. Okay. Would you mind sharing the screen? I've got a little mind map I'd like to put up. And you're on mute, Ken. I don't know if you said
It is.
anything.
It's set up for you to share. Go ahead.
Okay. Excellent. Oh, move it over here. So we're on fail-safe planning, and that whoops, that's this one. Do you see the image, fail-safe planning, logic, creativity, style shifting?
Yeah, we can say.
Excellent. So this is on fail-safe planning, and on from the executive viewpoint, whether you're a military commander or whether you're a chief information security officer in my domain of effort, or a CEO of a company, do you have the right person in the right role? Because different times call for different styles, and sometimes you need to shift your style in order to be successful as times change, or as traders as the markets change. So fail-safe planning is kind of the executive perspective on it. Do I have do I have the right person in place? And then for us folks working in the field here, we have to think about, when do we need to shift our style? When do we need to shift from being more logical and by the book to more creative and out of the box? And if we expand this a bit, you know, we could ask, what do we want? Well, we want to win the battle. We want to win the trade, and we have to decide, are we going to be creative? Is it a time to be creative and do something different, or is it a time to be very logical and by the book? And in the lesson, the text talked a lot about when you get into an asymmetrical situation, I guess an asymmetrical warfare situation, you can tell that things are starting to shift and you need to adopt a different style. I can't really speak to that, not having been in the military field, but the closest I've come to it, I guess, is the information security field, where I actually wrote this book, Rational Cybersecurity for Business, which was aimed at the Chief Information Security Officer. This person, the Chief Information Security Officer, think of the guy or the woman that's in charge of security for a big company like Exxon. This person has to deal with managing a technical team that's trying to keep malware out of the company, trying to keep users from clicking on phishing emails, trying to deal with ransomware, privacy breaches, all kinds of deep technology discussions. But they also have to go to bat with the senior management to get their security budget and to explain why they might need to shut down the email to the whole company for an hour in a crisis, or to announce to the world, we've just had a breach. That's a difficult discussion. And they have to deal with financial audiences. They have to deal with marketing audiences. They have to deal with management audiences as well as their technical audience. They really have to be able to shift their style. And I think trading is another job where we have to be able to frequently shift our style. I'll go to the ultimate, the epitome of asymmetrical warfare sometimes seems to be me versus the market. Because, well, I'm facing the forces like market makers, high frequency traders, also just my own psychology, which is exploited by folks that are marketing fear or greed to try to get me to invest in this or invest in that, maybe a pump and dump scheme or something like that. Now, the edge that I had in the bull market as an individual investor was I could kind of outweight them. If I got a good company that I invested my money in and I didn't get a terrible price, if I just waited, after a while, I could make money on it. And you could also count on the ETFs, the index ETFs going up most years, averaging 8% a year or something like that. You could count that in 10 years, it would be up from where you bought it, even if you didn't get the greatest entry. But now that we're in a bear and sideways market, now that we have possible stagflation for a while, that edge seems to be gone. And so I've had to start to learn some new tricks. I've had to do some style shifting. I've had to move from a long-term to a short-term focus, because when you're in a bear market or you're in a sideways market trying to catch those range movements, those happen in hours or days, not in weeks or months. So fear moves faster than greed. So I've had to shift my focus. The question is, am I the general that can shift his focus and know when to be creative and when to be logical? So how do we do it? Well, what I've been learning in RLCO trading is really some new kinds of beliefs, which are more attuned to the bear and sideways market climates. At times, we have no directional bias. We're ready to play long, we're ready to play short. And we're playing on the intraday time frame or on the swing time frame, or both. At other times, maybe if we detect that there's a bear rally on, it's game on, and now we can play long. Or when it's breaking down, we play short. And if we're wrong and we're not in a bear rally anymore, now we're going back into the downturn, we stop and reverse. We have to be radically open-minded. This was another key aspect of style shifting, and being able to be that guy that the executive wants for fail-safe planning. Ray Dalio in Principles, another one of my favorite books. His first principle was be radically open-minded. Ray Dalio's a manager of a hedge fund. So we have to, at times, re-enter. I had a day trade on in Goldman Sachs today. It was in the late afternoon, and the market was about to start a late afternoon breakout. Good on me for noticing that, and for noticing that XLF, the financial sector, was one of the best ones, and that Goldman Sachs was part of that, and picking Goldman Sachs. Well, then when I tried to get up to no lose plus dinner for 2, I was a little too aggressive with my stop, and I ended up getting a bad fill and breaking even on that trade. And then I went on to play US Steel, which didn't go quite as well. I mean, I did okay with it, but Goldman Sachs turned around and went up right after that exit that I made. And I noticed 3 bars later, it had 2 topping tail bars after the bar where I exited. It had basically reversed from where I exited and kept going up. That RLXD, regression line crossover, that I'd seen forming had not formed, because it had now made 2 topping tails and it had broken out to the upside. And, after that, I said, well, what if I thought maybe that could happen, and I'd put a stop limit order, over those 2 topping tails and got back in? Because if it did keep going, it would be no regression line crossover, no harm, no foul. In fact, the trade's even better because it's survived a little shakeout there. So if I had re-entered, I would have enjoyed a 3.5-hour trade, and I trailed stop that with alerts, just to see what I could have gotten out of it if I'd done that re-entry. And I have a little change request going on for my own plan, about at times re-entry is the key to sanity is another thing I've heard Ken say. So that's kind of really intraday style shifting, right in the same trade, in the matter of minutes, you're style shifting. I'm still not quite sure where the asymmetric fits in, except sometimes I feel like the market's much bigger than me and I'm trying to survive it. But another thing, I guess, I know what, I even had a little expansion of recognize asymmetric situations. Well, like when you have a good trade and you were in, and it was a 2 or 3 to 1 reward to risk when you started the trade, but now you've already gotten 1.5 R, and it's no longer 2 or 3 to 1 because your resistance target is sitting a 1/2 hour away from you. Now your reward calculation isn't as good. Also, maybe a low risk idea, that's an asymmetric situation too. Maybe when you're, maybe when Tesla's or Coinbase, we talked about over the weekend in the swing frames, Coinbase was sitting over long-term support with a lot of upside above, maybe that's a low-risk idea with an asymmetric opportunity. Maybe that's our edge. Maybe the edge of using uncorrelated systems where we mix different systems, some that are short and some that are long, some that rely on volatility, some that rely on quietude, so that whichever way the market jumps, we have a trade going in that direction. So with that, I think I could probably shift my style, not just once, but every day. And I could be that guy that's both logical and creative, who you want around to manage the family's money. And with that, we'll just say, aho, thank you.
Luke.
I went through the exercise explaining a little bit about what's happening in the trade and how the super pinch is where all the regression lines are meeting and everyone's agreeing on fair value at that point. And I liken that a little bit to trading the Aussie 5-minute, in that normally is the case at the start of the trading day for us, which is 1 hour after US closes, maybe sometimes an hour and a half, 2 hours, where there's not a lot of volume, not a lot of trades happening, everything's sort of pinchy, and got to make a decision as to which way it's going to go, frame it both ways. Don't be surprised if it's a fake one, go two in the other direction. And normally a lot happens now, what would be 2.5 hours, 3 hours, normally when Asia opens, after the US session restarts for the morning for us. So yeah, I sort of noticed those symmetrical levels, I guess, when the price sort of agrees in that sideways quiet pinch, sideways quiet channel, super pinch, and I've only just started to put it on the RL90 and the 270 again to work out support and resistance levels as well, because I think with removing them, it has prevented me from noticing higher timeframes. And going off what Sonal said yesterday in her speech in this lesson, you really have to notice a lot more about what's happening with the higher timeframes. And I've been going back a little bit with my reviewing of my trades to make sure I'm not just trading in the direction of the daily candle, but if it's if the daily candle is looking strong going long, and the hourly is also strong going long as well. If I'm going short, there's no reason not to go short if there's an entry on the 5-minute. But just be mindful that I'm going against the higher timeframes, and to get out potentially earlier than what I would normally have gotten out without noticing the higher timeframes. I remember talking, or Ken talking about when we review the R histogram and how we don't want potentially a symmetrical R histogram. We want it always skewed to the right. And in analysing those statistics and the trade results after 100 trades, we definitely want it skewed to the right, and that it's between -1R and 2R, but also those fat tails to the right, which makes sure that we've got coin flips that are better than 2 to 1, that we can also make sure that we can utilize position sizing techniques to the fullest extent to what we can, but when we've got those trading systems worked out really well that way. And then if we've got 100 trades and we've got trading systems that that are not just long, not just short, then not one trade's going to make the difference as to whether or not we're going to make a gain. What else? Yeah, I think that's probably all for the day. I've noticed something that I've picked up in the last 2 or 3 sessions is that I still need to work on my planning for the day. I don't normally size up the chart for the range stat frog box when I start trading the day. I just start trading, and I don't normally have a standard MMRB. It's always based on the PSR and the entry. So I'd like to go back and make sure that at the start of the day I've got a good plan to work out what my objectives are for the day based on how long I've got to trade that day. And the last probably 4 to 6 weeks has been very skewed into trading for 2 hours and having a break and trading for 2 hours. And trading the dollar doesn't normally mean that that's a really good outcome, because you might have 4R in one trade, which is great because that might be your only trade for the day. But over the long run, that's not going to work. For me anyway, I think you've got to set aside 4 hours on a particular session, whether or not that's the Asian session, London session, and how you can actually trade those 4 hours. That's why I've been trading a little bit more on the DAX, because that is good at night time, because you can sit at home and just trade by the laptop on a 2-minute chart, which makes it quite useful. And only have about 3 or 4 trades in 3 hours, just following the PSR. So yeah, I've definitely changed it a bit than just sitting in front of the screen on the Australian Aussie 5-minute for 8 to 10 hours a day. I hope.
Let me share a screen right here real quick. Yeah, let me know when you can see that.
Don't see any content yet.
Hang on, should be there in a second. No.
Okay.
You got that? Are we good now? How about now?
No.
Do we have that yet?
No.
Let's try that again. It wouldn't be a night at the office without it crashing. All right, how about, let me know when you can see that.
Yeah.
Okay. Yeah, so I'm not going to go all the way through these, but these were the high points on Chinlong's commentary. So I have about a 12-minute executive summary of some of the big points he made, and plus he's got about 50 minutes on this. It's in the Creativity 202 lesson on Patreon, on YouTube, and in the Creativity and Foundations course. I would just say that a lot of what he was talking about was the actual practice of integrating these competing points of view, whether it's creativity and logic, um, systems based versus intuition, day trading versus swing trading, risk on versus risk off. So the actual practice of how to mix was a very essential element of his presentation, how to come to a realistic approach to do that. And so I really want to just commend that whole presentation to you. I wouldn't change a word of what it was that he was doing. But what I wanted to do instead was kind of hit some of these big topics that I actually covered last night and that I didn't have time to draw sketches on. But I did want to actually sketch them for you here. Let me know when you can see that.
Yeah.
Okay, let's see. Okay, so the first one was the idea of asymmetry and the dojo. So what I want to consider is just the dojo itself. If that's a dojo, you don't know it's a dojo until you go back a certain distance, and you have to be able to compare it to everything that happened before. So just because it looks like a plus sign doesn't mean it's a dojo. And I want to talk about the asymmetry of the different populations that are looking at that. So imagine, if you will, a move that had started inside some kind of sideways quiet channel and then had a decisive breakdown to this little dojo here. And so now I want to talk about the three different populations. First of all, imagine the feelings that the winners have. The guy that got short on the breakdown and was able to ride that thing all the way down and is now holding that dojo in that little box. And he was hoping that it would do this, because we know that the size of this move could be leg one, and so there could be another leg two. So he's enjoying this, and he's hoping for this, So he has a certain emotional valence. The loser in the trade, the guy who was trying to go long, or who's been trying to short this, or stop and reverse it every time, is in this position and just feels absolutely horrible, and so that guy, so there's two of those guys. There's the guy who's ready to quit, and then there's the guy who's ready to fight to the death. The guy who's ready to quit is ready to just collapse. And now, instead of having that population that's buying and trying to push it up, that disappears. So the guys who at each one of these points that was trying to push it up gets to here and he just says, I've had enough, and he quits. Now suddenly there's even less buying pressure in that doji. So the quitters are the guys who actually are helping to realize the next leg down, because there's nobody left to buy. But then there's the guys who are ready to fight to the death and are saying, no matter what, I'm pushing this thing back up here to get all my money back. So you've got winners, you got loser one and loser two. You could even say conservative winners who say it's more important for me to capture and preserve that win than to hold out for a second one. So you could almost say there's winners one and winners two. And then, just because of the magnitude of the move, because that was an abnormal move, you're going to have a bunch of other folks that are now suddenly interested in, hey, what's going on? And now they're going to come rushing into this thing, and they have no emotional investment in that position at all. And so those guys are taking, well, how many different lenses could they be looking at? If each one of those is a little telescope or a micrometer or something, there's a million different ways that guys with different time frames and beliefs and whatever are attracted by the smell of blood, and who come running in here. And some guys are going to make the case for why it's going to go up, and some are going to be coming down. All you know is that none of their points of view were reflected in the price action that has already been in play. So this is a brand new pop. Now, how big is that number? And how much money are they bringing to the table? Well, I don't know. So the idea that you think that you can infer what that doji actually means is never less true than that. I mean, your belief is never more unfounded than thinking that you. But what you can say is that as long as I can put a small enough manageable risk box on this thing, and there's a large move up and a large move down, I don't care where it goes. There's just so much emotion baked into the cake from the different winners and the different losers, plus all the new rubberneckers who are running in with money, that this thing, because it is in play abnormally, the size of the next move is huge. That's why the precondition for the supported spring crossing is that you have an abnormal winter, that there was an extraordinary abnormal loss in here, which means that that thing is in play. The fact that there was a huge winner versus loser, winners versus losers, that tells you this thing is in play, and it implies the size of the follow-through. So when you talk about asymmetry, that simply means that there's not an equal distribution. It's not a mirror image. That is the opposite of a mirror image. That is the muddiest thing that you ever saw in your life, you know. So that's one way that we can think about asymmetry. Okay. So let me just clean up. This was, I didn't mean to erase all of that, but what I was going to say was this was that Goldman Sachs move here, that in that little doji flip, there was a move possible down to here and a move possible up to there out of that tiny little doji. Which way is it going to go? I don't know. It ended up doing that. But that's sort of a big, strong move up, half a move back. So it's in a perfect position for unpredictability. And you can't be surprised with a move in either direction. So that was one of the points I wanted to make yesterday on the asymmetry of the doji, and that why context absolutely matters. And remember that your time frame, here's another asymmetrical feature, and that is that when you're looking at your little doji in that time frame, whatever that time, the guy who's on 3 times your time frame is looking at, you know, that potential in the future and that far in the rear. And the guy who's studying daily charts is looking at that much, and weekly charts is looking at that much. So the larger the time frame, the smaller and smaller insignificance of all the things that you're attributing meaning to. And when all those people start bringing their money into the play, because it's a compound critical state, now suddenly this thing is moving and you're trying to ascribe meaning to it based on your look back period, when in fact it's all these other participants from all the other time frames coming in with their wildly different points of view that are moving this thing around. So you can drive yourself nuts trying to make sense of it all, but it doesn't mean that there is any sense to be made in there. As long as you're being strict on protecting yourself against risk, then you can achieve those asymmetrical histograms. So I wanted to talk about, I didn't mean to erase that, water cycle in the doji. So if we say there's something like this mountain that we're trying to climb, and it is laborious, and you got to go around and around, and every little step is hard, and you're trying to achieve wisdom. And the higher up the mountain you get, you know, the further you can see towards goals and objectives and other contexts and all that stuff. So each one of those steps is a laborious little process. And along the way, you're generating this to-do list of all the things that occur to you, these little aha moments that you're getting along the way, questions and answers and insights. And all those things are coming onto your to-do list. And we know that in order to actually get to closure, you want to minimize work in progress to a couple, 2 or 3 things at once so that you can get to completion on it. Aha, I actually got to completion, and now I can put that in my completed list. Well, what happens is that as you become more and more reflective and more aware, you got all of these inspirations up here, inspirations and reflections, and they're just like snow or rain cascading down this mountain that you're trying, and all that water is just thundering down and disrupting you on your laborious step-by-step journey. Like for every step you take, there's probably 10 times the number of ideas that could be investigated, and all of those things are going onto your to-do list. So your to-do list is growing asymptotically, but your completion curve is looking like this. And so that it's not unusual to get a sense of despair that the more I learn, the more I realize I don't know, and how do I still persist? So there are some things that we can do. We want to minimize work in progress so we can actually get to closure on things, but we also want to be aligned so that the tiny little things that we're doing are not just individual victories, but these little victories together become structures that allow us to get leverage from, and so it's additive. So we're hoping that our little learning curve, instead of being just linear, is going to start approximating this, that there are things are coming together for us. That's where that top down and bottoms up is allowing you to see in different ways. So that was one of the senses that came out of Qinlong's journey towards the top of the mountain, that it's hard, and the higher up you go with the less oxygen, the more difficult it can be. So you got to be in that thing for the long run. Here was another, just a picture that came to our mind, and I talked about this as rotating price. So if you had some kind of price action and it does this, and you're starting to get this little idea, and you start thinking, yeah, it's quiet. It's sideways quiet channel. Yeah, there's nothing going on, and so we leave to go look for something else. But what I want you to notice is the normal volatility in this thing is over here. At some point, this is so abnormal, we've got to recognize that this is not the absence of action only. It's actually a building up of kinetic energy. Here's what actually happens. Now, if you rotate this thing 90 degrees, the longer it stays inside of that channel, it is actually looking like this. That it did this, and the higher up the channel that it goes, this is like gravity. The higher up that it goes, the greater the potential energy. So at that tiny little shelf at the top of it, it doesn't take much to nudge it, and once that thing starts rolling, you start getting that runaway train. So we've got to learn to recognize that during periods of abnormal volatility, on the volatile side, you can play those individual swings because the herd is running crazy. And then there comes periods of time where it gets a little bit harder and harder, and the easy trading of here is not so easy in here. So you either have to not trade, or you have to reduce your minimum manageable risk box to such a small level that you're not really getting paid a lot, or you have to take on crazy risks. And so then what we got to remember is when it does get up to this abnormal, what you really have is the potential energy for large moves in either direction. And then we got to learn to recognize that the Z3P is very tradable and the super pinch is very tradable, that the absence of motion is coiling and compressing that spring and building up the potential energy of what actually is going to happen. And then the size of that minimum manageable risk box is small, and then the size of the move is large. So we've got to learn to recognize that that is the asymmetry of potential energy versus kinetic energy. So now on the choice of how to integrate or which one to pick, I'm just going to suggest that it looks something like this. I want you to imagine a teeter-totter. Um, let's see. Let me get this thing going. So I want you to imagine the teeter totter. And then on this side is all the creative guys, and on this side is all the logical guys. So which one of those guys should I be? Well, we know that it's probably, there are times in which logic, or not creative, there are times when you want that the creatives are winning everything, and then there's times when the logical guys are winning everything. So there's probably some period of time in which the pragmatic guys, the blenders, are winning. And so you might, as you start looking at the asymmetry, you might say, how logical and orderly does that market look like? It's trend following, and it just seems to be working. So the logic of rules-based systems, I should say it that way, rules-based systems, is really favored. And then there's other times when guys who can frame trades creatively and the one-off is working. So I want you to realize there's probably some pool of guys over here with little packets of capital that they can invest. And as those guys start winning, they're putting chips down on this side. And then these guys have a certain amount of money to put. I want you to realize that you got a bag of chips. Maybe you've got 10 little units of capital. And what you're doing is you're just reading the oscillation of this thing. Who's winning? And then maybe when the creative guys are winning, that's where you're putting some of your money, on this side. And you're adding weight to it while that's working. And at the same time, that gets as far as it can. And it looks like now the logical guys are starting to work. So you're starting to put some money in there and then pulling this money off. So you don't have to be all in. You don't have to get it right. You might be putting one here and then one there and then two here and then take that one off. So you are constantly deciding how and when to place your bets on the basis of your read of creative versus logical. If you're not a creative person and you're not a rapid framer, so there are times when you shouldn't be trading at all. You should only be trading when it's clear that your style is really working. And then to Dan's point, there are times in which if you can shift between these two different styles periodically, whether that's intraday or based on market conditions or whatever, the z-score, the risk z, you might decide, hey, which side of the teeter-totter is winning. So where you're getting paid is the ability to discriminate between, is this a market, not just bull and bear and volatile, is this the market in which creativity is being rewarded or logic and rules are being rewarded, and to what extent, and then how much of my money do I put in there, which is a separate issue. So you're getting paid to be this little point of judgment in here, that balancing point and the fulcrum. And where you have the advantage over all these guys that are herd animals is that you can make decisions on the basis of planning and rehearsal so that you are instantly making decisions because you realize that this is actually a dynamic teeter-totter, that you're not wedded to one view or the other, that what you're trying to achieve is balance. That you are, and maybe you are 10% creative and 90% logic based because that's where the market is. But you also know that it's gonna, for every yin there's a yang, for every teeter there's a totter. And you've seen also markets where it was 90% creative and 10% logic. Well, which one is right? Yes, the market is right. So asymmetry has to do with the shifting of balance points between creative and logic, between growth and value, between large caps and small caps. How many different teeter-totters are in play? For every person that has a binary view of the world, it's either this or that. Every one of those is a simultaneous teeter-totter, that this whole thing is now you're trying to balance yourself on a round ball. So get you some of those little balance balls where you take a flat piece of plywood and you try to balance yourself on a round ball, and that thing's trying to rock in every possible direction. That's the best image of what the market is like, is you got that roller, not just side to side, not just a cylinder and with the boogie board where it's just going left and right, but it's truly a round ball, so that thing's ready to roll in any of the directions, depending on, and it's responding to the way you've allocated your weight. So that's actually a pretty good physical exercise to model what's the mindset that's needed for market survival, is being balanced in all those directions and going by feel. So now your center of gravity, your core, and you're anchoring to the feel of the market through your feet. That's at the other end of your body. Your head's way at the top, but actually the taller you are, the harder it is to maintain that balance point because of physics. So that low center of gravity and staying anchored and closely connected to the market. How far away from the market price action is your center of gravity? Is your brains in your feet or in your head? I choose feet, which is why I play soccer. Anyway, so that's what I wanted to say about some of those asymmetries that came out of yesterday's discussion. And that's the first time I've drawn those pictures kind of in that way. So they'll get better once we get going, but you had a chance to hear it, for the first time. So aho to that. I'm gonna hit the tones and then get your word for the day. And then we have, I told everybody I'd go at 9:30, so we have time for some discussions too. So, but I do want to get our words for the day in before we go to coffee talk. Okay, so here's the aho and the tones. Oops. Luke.
Fat right tails.
Fat right tails. We're using the German fat right tail. Dan.
Shifting.
Mine is balance. All right, coffee talk. Reactions or commentary, questions or follow-ups?
I found it really interesting to think about the asymmetries, the different kinds of asymmetries and how they're all happening at the same time. And I guess that's really what I'm doing as I get more sophisticated about the intraday trader and trading, and I'm looking to find the movers, and I'm sorting the sectors and looking to see which one's moving. And I was wondering whether it might always be a good idea to always be trading the SPY, and that way if the SPY is making a move, and then when you see it making a move, now you look and see which sector is driving that move, and your next trade you jump on that one.
Yeah, well,
that might be one way to surf it.
Yeah, so one of the ways I do that is by having on my screen, I'll have the SPY, IWM, DIA, and the VIX. So you go from this, the S&P is 500 big old companies. That's some real things. The Russell is 2,000 individual companies that are an aggregate. The VIX is pure psychology. So it has no intrinsic underneath. There's no underlying thing except the security of human psychology, which changes with every heartbeat. So one of the things that you'll see early is that the VIX will trigger a change early. Like if the S&P is in a sideways quiet channel and the VIX is noisy, it's it's a pause. But if the VIX is extremely quiet, then when it does make a move, somebody is going to, all the volatility traders are going to be surprised too. And you're going to see popcorn popping. So you start seeing asymmetry in the reaction time, and then the follow through. Like the DIA is the last thing to follow through. That's 30 enormous companies. So if the VIX triggers, and then the Russell triggers, and then the S&P starts moving, I am framing a breakout in DIA in that direction with a very small risk. Because if it starts moving, then all of those 30 behemoths are going to start adding to that movement, and you can actually get a 5-cent risk box on that enormous company or that enormous index, because it's the asymmetry of two bags of popcorn. I want you to think of two different bags of microwave popcorn. One of them you just took out of the box. The second one just came out of the microwave where it had been bombarded for 40 seconds with radiation. Not a single kernel has popped yet, but every single one of those little guys is ready to go. And you're looking at those two and saying, well, they're both dojis. Yeah, but one of them's context is completely different than the other. So that's one of the things that we're trying to do with finding compound critical states. So now think about the frog trader. The frog system was one that discounted all of the previous information, spent no time on any of that information, so it has a relatively wide frog box. The move has to be more than a frog box to become a signal. But if you have other information that you've spent some time looking at the context, and your MMRB is 1/3 of that size, you actually have a 2-to-1 reward to risk ratio inside the frog box's noise. So there's an asymmetry of available information. There's also an asymmetry of how much confirmation do I need before I act. If you've done your homework and you've shrunk that MMRB down to the smallest point, you're the guy that needs the least amount of information to start acting, and you're at the front end of that reaction train. And then if it goes and these other people start adding positions as each little threshold of new confirmation occurs and increasing, so the asymmetry of the amount of information that I need to be persuaded to act, that's an asymmetry. The fact that everybody in the market has different levels of information that they need. Like, which mouse are you? Are you mouse number 1 or mouse number 2? Are you mouse 1.2, 1.3, 1.3? So you can have infinite numbers of, degrees of confidence that you need. But in general, as long as you're somewhere around mouse number 2, you have some evidence, the thinnest shred of evidence, historically justified to make you believe that it can go. It's not your feelings, it's your statistical analysis. Whereas mouse number 1, he sees the first little wiggle in price and he believes he has evidence. Now there's a difference between mouse number 1's intuition evidence and mouse number 2's statistically refined evidence. That is the world of difference between creativity and statistics, or creativity and logic. I would call it statistics as opposed to pure logic, because there's a statistical probability. You could find a logical reason to trade it, but to me it's the difference between intuition and sort of the minimum viable information, or the minimum viable protocol, something that ends with MVP, minimum viable price action, or something like that, to trigger the action. And that's where I think that's where we have an edge, is understanding the difference between feelings, intuitions, and statistically validated estimate of signal. I think there's a whole world of difference in those two concepts. Experienced intuition versus minimum statistical signal. One of them is an individual's feelings. The other one is a statistical representation of thousands of people's feelings over time.
Mm-hmm.
Which one is reliable? I'll take the statistics every single time because you're dealing with millions of people in the market. And I can't calibrate how their individual feelings are. But on a large index being moved by thousands of participants, I'll take statistics every single time. That's an edge. And once you've calibrated that, it auto adapts. Statistics auto adapt for you. So you don't have to worry about what kind of mood you're in. You just have to say what's the threshold for confident action. Done. And you've eliminated all your cognitive bias. So now you're ready to start adding and subtracting little bean bags or sandbags of capital. And then as it rewards, you quickly put them on, quickly take them off, because you know how fast the teeter-totter can come. How soon is a big fat kid going to jump on the other end? I don't know. But if that teeter-totter is way up in the air, and then all of a sudden a great big fat kid jumps onto the other end, everybody that was enjoying the win is going to get launched into space, much to their surprise, because they're sitting there gloating, look at it, we're winning, we're on the ground. And then a great big fat kid jumps on the other end. While you're busy congratulating yourself, great big fat kids have climbed up the ladder and are ready to jump on this thing to have fun. And you can't see it coming. But the very fact that you had an abnormal win is a hint that a change is coming. A change is going to come. So that's, to me, the humility of statistics and prediction. Over. Yeah. No disparagement to fat kids out there all over. Just we love you all equally. As I'm becoming a little fat kid myself.
You sent us an email about the research weekend.
Yeah.
You want to tell us a little bit about that? When is it?
So just sometime in the month of December, I think that you should put together a summary of learning the same way Chen Long did. Just listen to his journey and then do whatever you feel is right. Between 20 minutes, but not more than 50. He used 50 minutes because he had that much to say.
Sure.
And his engineer brain debriefed all of it. I mean, every bit of it. That was a debriefing of about 8 different courses that he's taken from me. The guy's a machine. So, listen to the guy, listen to Ken Hums from last year and Luke.
I already did.
Year.
Yeah, I've heard that. Yeah,
so,
I heard that.
So that's kind of what
good.
we're looking for is where are you? And just tell a true story about it and where you're going. Whatever you do is going to be exactly correct. But this is a chance for you to kind of sit back. And, last week or the week before, I asked you guys to think about your plan to use the 10 weeks for the 10 myths of creativity. So after we get through this section, the final section of the creativity course is 10 myths about creativity. So we're just going to take one myth each week as sort of the trigger, but there's not an exercise for them. The exercise is for you to decide what you need to work on for each of those 10. So now the ball is in your court. So what you might decide you want to do between now and the end of the year is self-assess and then develop a plan for those 10 weeks or something like that. The 10 things you want to follow up on your to-do list with some kind of, or 5 things, or 3 things, whatever. Chen Long, I think, picked 3 or 4. And so we just kind of want to get, you can't do it justice in less than 20 minutes. And more than 50 minutes, you're just working too hard. So somewhere in 20 to 50 minutes of a presentation plus slides. I'll listen to it and make some comments. We will make all those videos available in December to the team, and then we'll solicit questions or follow-ups, and then schedule a second one for you to kind of get feedback from people and listen to what they said or what they thought or whatever. And so we'll do something about that in January, I think.
So there'll be like a live research weekend where people comment on the videos they've already watched.
Yeah, I think that's what we'll do. Is
Okay.
we'll use December as sort of like an asynchronous gather the videos and
Yeah.
distribute them, and then let people watch them and think about it, and then submit questions. And then when we get a set of questions, we'll schedule something in January. Like say maybe your January 15th, Friday night, January 15th, 90 minutes for us to talk about the questions that were asked, and we'll record that and go back and forth, and you'll have a chance to respond. I'll send you the questions ahead of time, and then we can just discuss the things that come up and what you thought about after you. Because what'll happen is after you do the presentation, you'll end up thinking about it some more and say, "Oh, I should have done this or maybe that," or you will have started working on things. So we'll just schedule another follow up for January as a round 2. So we'll try to take this thing in bites.
Okay.
Because otherwise it can just be kind of overwhelming because you get all these goddamn videos at one time and all these questions, and it gives you more work than you can do in a year. So we'll try it this way. Okay.
Well, there are a lot of videos to watch. I'm thinking I might not watch most of the European ones until after, I finish this
Yeah. I would
course. Then
just
I can then after I finish all of ours, I can watch all of theirs.
Yeah.
But
I will tell
I
you.
definitely have a treat.
I will tell you that you want to watch Chun Long's.
Yeah,
You
it
want
sounds
to
like
watch
it.
that one soon. And then
Yeah.
I'll tell you probably the last 5 videos from the last 5 weeks from the Euros have just been off the chart amazing. Like I would probably go to like 1 November or whatever is the first weekend in November
Hmm.
and start with there because they really hit their stride right about that time.
Yeah.
And
Well, Luke's been getting a lot out of it. I can tell,
Yeah.
because every time you say you
Yep.
watched it. Yeah.
Yeah. So I mean it's and Chun Long has also said that one of the big and it gets to that picture of the the snowstorm on the mountain, and you're getting or rain, you're getting 10 times the water washing down on you of things to do while you're trying to take one step, carrying buckets of water up the mountain, and it's
Hmm.
raining harder than you can fill your bucket. You know what I mean? So it always feels like you're falling behind or you're sliding back. So you can overdo it on the listening. It's really the doing, and that's why I think you got to have a prioritized plan on what to start. But I would just tell you that the next project for interns, the next generation, is going to be to put Cornell notes on all our weekly sessions, just sort of like timestamps and all that shit, just to build an index because we got 100 hours of things to listen to. I mean, 2 hours a week, that's 50 weeks. That's another whole year. So, having the Cornell notes is certainly a way to get after that. But I think Chun Long's is an amazing piece of work. And the last 5 weeks of the Euros is phenomenal. And then, plus, you're going to have a list of the things that just going over your notes and reviewing the lessons or whatever. Even if you just take my little Cornell note sheet for each week as sort of a quick reminder of some of the things that might trigger you to decide when to go back and listen to. I would almost do that. Pick a topic, go take a quick look at the Cornell note sheets, and then maybe selectively listen to our session and the Euro session again at 1.5 speed or something like that.
Yeah.
And then get a sense of it. And then it's not a question of not having enough things on the to-do list. It's really the top 4 or 5 priorities. And that's why and that's what came out of Chun Long's. What is the specific thing in the shop, in the making of the bowl, that I'm struggling with?
Mm-hmm.
Not so much go back to the, no, I'm trying to carve a damn bowl here with a tool. Where is the sticky point? What is the unsatisfying thing? What is standing between me and this final realization of the bowl that I want to make? Do I have a very clear picture in my mind of the bowl that I'm trying to fashion? Which means basically removing all the things that don't look like the bowl. Is it I don't have a clear vision of the bowl? Oh, well, there you are, done in one. Let's feel what that bowl needs to be like. Look at it, feel it, weigh it, And then let me look at my tool. Is it sharp? Does it fit in my hand? Am I cutting my thumb off every other day? Or that kind of shit. And so it's really, I think, on the performance pieces primarily as the priority list and the to-dos. And then it's some of these other ones to sample periodically for inspiration or, just to shake it up a little bit.
What were you mentioned the 10 myths of creativity?
What's that?
You mentioned the 10 myths of creativity that we're going to be covering after we finish this section.
Yeah, one myth a week.
And how did that relate to the did that relate to the research weekend somehow, or?
Yeah, I think so. Yeah, so it's like section 7 in the Creativity 202 course. There's like 10 there's 10 myths.
Yeah.
When you open that up, it's a statement about the myth. And then Fletcher makes a claim, says, "Hey, research shows that this is not true." Done.
Mm-hmm.
So there's not an exercise, there's not a story, there's not an exercise for me on trading to do it. What we want to do on each of those 10 weeks is just kind of refresh our brain with that little creativity trigger, and then use that week for you to work on your priorities that have come out of the Creativity 202 course. So you should have a to-do list from all the things that you want to do, having come through 25 weeks of this course, plus all the other stuff that you're doing, that you have some kind of master to-do list.
Oh, yeah, I have that.
Yeah, so use the creativity trigger, and that you have a certain battle rhythm now about how to read the creativity lesson, do the exercise, do my exercise, come in with a true story about it. Where did you go? Now, substitute my work and Fletcher's work for your own self-directed work. And then just use the little creativity trigger as a reminder that our habits of mind are not always creative. That little creative spike plus the thing that you want to work on might just be enough to help you break through and get to closure on a task that you want to complete. Then come in and tell a story about it. So that week's true story is just going to continue to be work in progress, but it has to do with the thing that you are creatively trying to work your way through.
Mm-hmm.
A self-directed task as opposed to a Fletcher-directed or a long-directed task. So what I say is, for the research weekend, maybe what you want to do is kind of just step back. Now, wherever you are in the mountain, just kind of look around and say, all right, here's where I am. Here's what I've done. Here's what I need to do. Here's my priorities. And start sifting through all that stuff to come up with the things that, repack your rucksack.
Okay.
Put a certain things in the base cap to come back to them. Then repack your rucksack for the next little journey. Then do an excursion, then come back. And so start maybe use that as sort of a mindset. It may not be a mountain. Maybe the model is, hey, I'm exploring this territory. I'm going to go north for a while, then come back to my base camp. Then I'm going to go east, and then what? So you just start to do little out and back excursions to start working off the things on your to-do list.
And to consider how those 10 myths apply to some of that. Yeah.
And it may or it may not, but it's
Yeah.
going to be just enough of a creative trigger
Mhm.
to trigger all of the previous 25 or 26 weeks of work that we've done examining creativity with all these different models and modes and points of view. So your brain is now primed with all of these little techniques. It's like the popcorn bag that's been in the microwave for 40 seconds. And now just a little bit more, and boom, it starts popping. And now you can focus strictly on self-directed tasks, self-directed exercises,
Yeah.
and you become self-actualized in that way. This is like that gradual release of responsibility. You're now co-creating this phase of the creativity course, and then you just come in and tell us about it, and then we're going to benefit from your insights, which is what we want to do.
Yeah.
Make sense?
Yeah. Yeah.
Yeah. So just listen to Chun Long. You will actually watch him. He went
Yeah.
through that process and has identified 3 or 4 things that he really wants to do well: ruthless risk management, sniper trading, continuous framing.
Mhm.
Done. Exit management. That's ruthless risk management. So that's what he wants to do, and he's got a very clear reasons why he's picked those, considering all the things that he considered, why those 3 or 4 things really jump out at him. So watching him go through that process is very instructive, because I mean that's a systematic traversing of the entire mountainside. I mean, he looked in every cubby hole, behind every tree, in every shadow. So yeah, I have us at about 20 after. I want to call it there, and then give you 8 or 10 minutes in case you're sticking around for the nightly. Then it give me a chance to go get my coffee.
Okay.
So
Thanks for everything.
I'm gonna check out real quick. Appreciate it,
Okay.
guys. We shall see you soon.
Okay. See you soon.
Yep. Luke,
Bye.
you good? Okay. Ciao for now.
Ciao.